All right. Tanika, did you do any trading today?
No, I actually haven't been trading. Goodness, probably in a couple of months now because work got busy for me, but I'm trying to get back into the swing of things.
Oh, okay. That's what's up. You started a new gig?
No, so I'm a bankruptcy attorney, so things just started to get a little busy for me because ever since COVID, it really slowed down a lot. And I'm
Gotcha.
starting to add financial coaching to my business, so just trying to get all of that squared away before my attention gets pulled away from by trading again.
Gotcha. That's what's up. Um, I guess we can see what Apple doing. Let's see. So on a 30 minute, had that gap down earlier today, and a double top did play out on the 30 minute. Hit. I was telling people earlier that I know some people try to go all the way to the target um, with a double top or bottom. I just found that just have a higher success rate of trading it back to the neckline and keeping it within range. Um, and of course, there's some other further downside targets or upside targets that you can use, such as using the Fibonacci um, retracement tool to mark off levels. So we clearly see that a little bit beyond this neckline, we had the 38% retracement level was hit. And we do know that oftentimes, whenever the 23% is violated, price typically wants to fight to get back above to retest that zone, which it has done right here. So this would have been real good to for me to basically, if I would have saw this back in the market, we probably would have played it something similar like this. Is So if I was coming back in time on this, I would have my I'm gonna have my retracement levels drawn up, and of course I'll be looking for the 61 to see if price can come there. But this is how you can actually trade this as well too, because it had a gap. Now we're thinking, okay, let's see if price can come back and cover this gap. But what we would do is we will then mark off zones like this. All right, I'm gonna go ahead and take this off. So I'm gonna bracket it. And it takes a lot of discipline with this. And we're only looking for longs on this one because of this gap where it's located. All right. So if I hit, all right. So we got this one. All right. Now you move. All right. So this is what this is about. So what we're looking for is looking for a bar elimination. And what we're doing is we want to see a bar engulf these temporary resistance and support zones in the direction of here. So we're still not in the trade. So if this candle would have engulfed this one, we would have been looking to go long, but it never did. So you got to move it. All right. So look what happens. We're still not in trade. Why? Because our bias is based off of that gap. That's how we're gonna play it. So we move here, and then we do this. So you see what's happening. We're waiting for an engulfing because when something engulfs, that means something strong has come in the market to push it into that particular direction. So we're playing the game a little bit different. All right. So then play it again. All right, here we go. So we're in the trade now. Why? Because it just engulfed this one. Not big, but it's enough, right? So we're in the trade where our stop loss go. Right here, below the candle that was engulfed. So we're in the trade. What's our target? Back to the gap. Targets hit. Boom. So you see what I did. So what I'm using is this is a technique that's just basically the engulfing bar technique or single bar elimination. And if you start bracketing your charts, you'll start seeing opportunities um, all over the chart for that. So let me go ahead and take the double top off, and I'm just using this strategy on some current things right now. So right now, we would have had this as resistance, and would have had this as support. And if we were looking to trade this to go short, what we would look for is this either this bar or this bar to be engulfed. Now we did get a little bit of engulf, so if you did take this trade, you have your stop loss above here, and you're looking to take it down to the downside. But you need to establish your bias. You know, where's the bias? Where's the market look like? What direction? And the only reason why I would be looking to go long because I had just saw that gap. But if there was no gap, you know, that's something else. So right here, it gapped up. So how would I play this one if we went back in time? You know, I simply would have had something like this, and I'm looking for this candle to be engulfed. It never was. So guess what? This is the next candle. So then what candles engulf this candle? This red. As soon as it engulfed it, we're what? We're in the trade. We're short. Okay. And we're going to, all right, this is what we would have had. As soon as it engulfed it, we'll look to take some short positions to get in and close this gap. Right? Of course, they did more than that. And, you know, you're looking at this, you're like, that's not a lot of price movement or whatnot. But, you know, from here, this is a $137.24. And to close that gap, it's to $135.97. That's a lot of money when you're talking about options, right? And this is only in a 30-minute window. So of course you can really eat. The Greeks are not going to eat you up. So that's something you can do as well too. I also I think I got videos on bar elimination. I hadn't done it in a while, so I never really added it, but I can add that back. And this is for people, you know, who may be, you know, want something a little bit different when it comes to trading. But see, these are some of the things that you can add to your, you know, arsenal to increase, you know, if you want to take more trades, if you don't want to wait for, you know, a double bottom or double top, and but you may see other opportunities. I just know for me, the double tops, double bottoms, you know, it's just been easier, especially in forex. It's going to show up a lot more, but they show up in stocks, so that's why I'm showing it on the stocks, on the stock side as well too. Um, we're going into 15 minute, you know, same thing essentially. We can go look at what was another stock that moved? I think Google had some action. That's the wrong one. It's Google. Now, this is an interesting one. We have a gap. You know, it look like it's going up. So if we're coming in the market now, how we want to play this is currently right here. So post, we at $96.45. So because you got post um activity, that means that the market is still active right now, even though it's closed to everybody else. But you got what we call uh, they call them black markets or whatever. It's just another market that trades after hours. They call it dark pools. So I do have access to that. Some people do, some people don't. Um, but yeah, so the market's still open. I think it closes really at 8 o'clock. So the dark pools will start to close at 8 p.m. So that's why you see right now that over here to your right, you see it in green, $96.25. But then you see up here said post $96.45. So right now it's that. But if you don't have access to the dark pools, you're gonna see the price of 96.25. But somebody right now, and we while we're talking, it may go up. You never know. So, um, and to prove it, like I said, I hope that we can see it. You might see the price change. If it do, it do. It don't. But it may give you a glimpse. Did it just do that? I think it did. Wasn't it at 96.45? So yeah, it was at 96.45. Now it's at 96.46. All right, there it is. So yeah, so y'all see it moving a little bit. So that means there's some couple buyers and sellers in the market before it shut down at 8. Um, even though the stock market closes at 4:30. All right, so you got this level here, and you see it just went back down. So yeah, so it's still active right now. All right, so you see I got this blue line. That's really where the post market is right now. So guess what? We're not going to take this trade if we got your bias. The bias is, hey, I want to close this gap. I want to get up here, but I'm not going to take this trade until what? This green, which for us now, we need price to break above this blue line. And if it was just a regular market without the post, it's here. We want to see this candle eliminate. That is it. And you'll bracket it like this. So what are we doing right now? Nothing. It doesn't matter if price doing all this, but nothing. It doesn't even matter if it breaks. If it breaks down and if it violates, these levels, you're going to tell yourself, hey, it did not. My bias did not follow through. I'm not going to take the trade unless you are counter trading and you're looking down at this over here. You say to yourself, well, this is a gap too, which is true. It is a gap too, and somebody can argue that this could be a bear flag that's taking us down. You can argue that. But right now, the bias would be what? To close the gap. And I probably will be leaning a little bit towards this too, is because we've seen that what Apple did. Apple closed that gap up there. Could Google follow? And so you start asking those questions, you become a better trader. So this is what you start doing. You put both of them up, and then you start to see, are they correlated? Is there maybe some is there patterns about each. Well, let me do this. Are there patterns showing us that these assets potentially could be correlated? And let's pull this up some. And we go to a bigger screen for you. Where are we going? Where are we going? Right here. All right. So if you look up here at the top, all right, this is Google at the top, I believe. Yep. And we got Apple at the bottom. And let me take off double tops. There we go. All right. So they look somewhat similar, right? Not all the way, but somewhat similar. And well, let me see. The first one, are we on 15 minutes? Yep, we're on 15. Both are on 15. All right. So what sometimes can happen is that if you study these enough, you may say, hey, Apple is flashing potentially what Google may do next. So Google hasn't finished its completion, but Apple has. It already closed this gap. Okay. So what we do is this is called a correlation strategy. You find correlated and say, hey, if this asset moves here, it could be a sign for the rest of the asset in that particular class to move. So this is technology, right? So this is possible. That's not meaning it's going to be 100%, but now we can have a bias. So everything as a trader is all about bias. What is my bias? And that's why we use sentiment too. The bias is that everybody is short, so that means it's probably going to provide liquidity for people who want to buy. So if you got a lot of people selling, that means you got a bigger player that cannot buy enough to get what they want. So tomorrow I'll look and I may post about this and see if Google actually comes up here and actually covers this gap based off that we've seen that Apple has already done the same thing. So they got some, like I said, they got similar things, similar uptrends, similar patterns going to the upside, and we see different rally points. Um, so that's another strategy too that eventually we'll go over as well. So I'm just showing you that it's versatility, and then I just don't just trade double tops, double bottoms. But I think that's great for people who are starting out because it just helps you focus on one strategy and do it well, and just keep doing it over and over and over till it was you could just master it. And you can unmute your mic if anybody got to ask any questions anytime while I'm talking. I'm just going to go through various pairs in the forex market and see what we got. All right, so we got a triple top right here, right now on this one. Let's see. All right, yeah. All right, what is this? Euro USD. All right, and um. All right, so some of you may say, okay, well, how do we enter this trade? What do we do? Do I just automatically when it's the top two, that I just jump in? But yeah, it's subjective, but we do have rules that we can use. Okay, if you're going to be aggressive up front, I always suggest go with the lowest. So right now, if I want to go short, I'm not going to go heavy right now. I'm not going to put it a standard lot size. I may go low, 50 cent, a dollar. I like to start out with a dollar lot size because if it goes wrong, I'm only going to lose $30. If it goes wrong, I got a standard. That's $300. I'm not doing that. So let's pretend right now that we are trading this. All right, let's connect. And I use the paper trading because I don't use their brokers that's connected here. So typically, when I take a trade on here, all right, I also take the trade simultaneously on my live account as well too. And let's go ahead and set stop losses. I'm just going to type in 30 pips. All right, boom. And let's see. So if this trade goes wrong, we'll lose $600. Right? And if this trade, we want to take it. All right. So we said we want to take it to the neckline, right? I'm gonna drag this down further. So the neckline would be down here. Now, sometimes I don't wait till it go all the way to the neckline. Why? Well, you said why? Because there's levels in the market that price has to go to. These are landmarks. So I may take partial profits or all my profits here, see how price reacts, and then if this level is violated again, then I jump back in to go down, right? So it'd be maybe $800 we make right here, but if I want to take this on down, um, if it goes to the neckline, we're talking about $1,700 payout, right? Now, when it gets close to the neckline, I never set my target directly at the neckline. I always give it a few pips of, somewhere in this region. Then that's why I said it's subjective, right? Why do I do a region? I do a region is because that's just a habit for me. It's because when you're dealing with any asset class, there's no such thing as absolute. You start dealing in absolute, you can get burned. What does that mean? Well, if you say I'm going to cash out at $1, well, there's too many people in the market thinking the same thing. I'm gonna cash out at $1. Why not 90 cent? Why not 85 cent? Why $1? So it becomes a psychological number, especially round numbers. All right, they're psychological. Why do people say, well, yeah, Bitcoin will go to 100K? Why they don't never say Bitcoin is gonna go to $96,585.33? Nobody does that. When you tell someone you're gonna, how much money you make per year, you never give them the absolute. You never say, "Oh, I made $58,375.10 a year." I just make 60K. You just round it off, right? Or I make 100K. That's the numbers, but that's how traders think too. The sticking holes. All right, so that psychologically plays a role. So what does it mean? It means that a lot of people have their orders in those areas. So what can happen is we can you don't find too much slippage. Slippage means that your order do not get filled. We're in the most liquid market in the world, so that really doesn't happen. But it can sometimes in stocks. You may not get filled at a certain price. So the question is, why mess around with an area where you know a lot of traders are at in that area for that price? So instead, I'd like to put my targets a little bit before everyone else. So like I said, instead of being right here at the absolute, I might put it here. And this is a just subjective. It's up to you. But as long as we're in the area, okay, we're fine. All right. So that's how I would play it. Now I just sit here and just took the trade, just jumped in, right? Because I just said it was just a double top. That's one way of doing it. Okay. Now, if you want to be a little bit more conservative, you could play the levels game. And what I'm gonna do is I'm gonna take off the double top so we can make our chart like a lot clearer. So let's do that. All right. So we do have a triple top. So we are in a triple top, right? So what I would do is we'll come in. Once again, we're playing the what? The elimination game. Okay. Now, because we're on a 15-minute, it's gonna be a little different. I don't know if I want to play this game on a triple or double on this lower time frame. But if we did, you're not going short until when? I'm sorry, this candle has to be, eliminated. We're gonna look at this one. Since this one is already in play, all right, this one has to be eliminated. We got 2 minutes and 20 seconds left until this candle right here closes. What happens is if this closed somewhere in this area, we have to move it. But this is the previous candle. This is the only candle we can go off of, and this is the current. Okay. Now, you'll say, well, Eric, it's somewhat engulfed. Do we go long now? Why? Because that's not our bias. Our bias is not to go long. If I had a bias to go long, I may say that because it will play out here. If I said if we were going long back right here in this area, and I felt like it was going long, what would happen? I would have this, all right. As soon as it engulfed, I would have entered into the trade. I'm long where my stop loss below the counter that got eliminated, and that's it. But I'm not biased on this being long. Okay, now my bias is this is short. So you see, I'm playing a bracket. I'm bracketing my orders. I'm bracketing. Now, this works beautifully on a higher time frame because typically you don't have a lot of whipsaw and going back and forth. The price action a little bit more smoother because it gives you a lot of room to move. So let's go look and see what it looked like on a 4 hour time frame. You see the difference now? Now watch this. If this the candle that we're messing with, which means we got an hour and 30 minutes left on this candle, that means that you're not doing nothing. You're not going short. You're not doing anything until when? This candle is eliminated. So what does that patience look like? It would look like this. From here all the way to here, and that's not bad. It's only 11 pips. It's 11 pips. I thought it was going to be more. But it's only 11 pips. I can swing that. That's I can. What if it start dropping? We're not missing anything. We good. All right, we're good. But this is a 4 hour candle, so I'm not doing anything to what this is engulfed. Now, guess what? If it engulfs, you still gotta what? You gotta be mindful for all these pullbacks. Can you handle it? Can you handle this? Can you handle your count going up because this is where your entry is? Okay. That's just part of if you take the engulfing right off the bat. Now, there is a second way you can do the engulf, and it's called a retest. So let's go back and let's see if we can find one on the chart. And let's go on maybe a lower time frame for that. Let's look at the 5 minute. I see if we see a retest somewhere where we had a engulf. I mean a golf and a retest. All right, here's one right here. And see, these are the ones they don't they happen a lot, but you definitely got to be patient. You would miss more trades waiting on a retest, but you also would be safer. you'll be less likely to blow your account versus someone else who gets reckless. But let's look at this right here. Let's say we got a bias that we're going to go up. This is the candle that we want to see engulfed. This candle is right here. Bam. What happens? This candle engulf it. If you're aggressive, you go ahead and take the trade. If you're conservative, you wait for a retest. Retest of what? The resistance that was just broken. What happened? Price came back down. It retested. This is the retest trader. They get back in. They get in for the first time. You, on the other hand, you're in the trade. You're up, and then now you break even a little bit below. So this is type of trader that you need to stop looking at your account every 5 minutes and checking and seeing, because what'll happen is you see negative. That's regular drawdown. Drawdown happens. It happens every single trader in the world. The biggest, the baddest traders, the ones who have millions of dollars on a trade, they could be down $100,000 and it doesn't phase them because they know it's just regular drawdown. So it's the same with you. You could be up 200 grand and then you come back and then now you're like, ah, man, I'm only up $5,000. They get it. They go ahead. They get it. They're fine because they got their rules in place. If we enter on here, where's our stop loss? Below the counter, they got eliminated. That's it. Your stop loss be right here. What are we doing? Nothing. You're protected. You're here. Boom. All right. You can enter to get in, or you see the drawdown and then you bam. Well, Eric, how did you get your targets? Look left. This is area of recent market structure. That's what we want to take it back to. We'll take it back to the structural area. And then as you go in, y'all will see that when I go over the Fibonacci extension tool, I can use the Fibonacci extension to get those same types of targets. So how do we do that? Measure the impulse. We have our bias that we want to maybe go to the upside. We'll get the impulse. And these is how we get our targets. And look how it lines right up. Right there. Boom. And so you say, well, Eric, that's a big zone. Like, where literally is your target? For me, I like to take it a few pips, either inside of the zone or right at the edge. I'm not greedy. And a lot of times my targets do go deeper in, and that's fine. I treat trading like, look, it's not a lottery. It's not like people pay a lottery. It's like, if I don't do this now, I never get this opportunity ever again. I don't play the market like that. I know that this another train is coming. It always will be. So this is not a once in a lifetime thing. So I don't mind getting off out here. Do I think I need to work on holding and getting deeper in it? I believe so, and I can. But for right now, I'm satisfied for what I have. So see how the targets are here. That was based off of what extension. Now I'm gonna show you another trick that you can use. You can just use your trend line to drag it down, bam, put it on top, and then here's another target. You take the targets up to this point too. Now, if you have a pullback, of course, you need to pull it right there with the pullback. So you see the same zone, right? Same zone. All you did was just measure the impulse. So these impulses can be done without the Fibonacci tool. All right, let's play it. See how it works out. All right, so targets hit, right? So we're good. All right, so we're up $22 on that short that we did based off the double top. And then some of you watching this, you may have already jumped in the trade. So you're up if you did or whatnot. And of course, I'm using bigger lot size, so that's it. But it might not have been that lucrative for you at this moment. All right. So I did take the double tops off. I put them back on for you. And this one really was a triple. So this is a triple top, I believe, or was it just a double? Okay, it was a regular double. So y'all see right now, if we're trading this, if I took a dollar lot size, that's $30 potentially, and if it drops from here all the way down to the neckline. I mean, that's 80, 84 pips. And if we take it to here, that's 78 pips. That's not bad. Okay. Um, it's not bad at all. In fact, I mean, I may look at this and see. All right. So let's check it the sentiment on it and the euro. So something we got to keep an eye on. And it could be changing. So 70% are short, 30% um, are long. Now, but look at this: 70% was short, but look at this massive rally up. You get what I'm saying? So that means the shorts have been annihilated. They've been getting ate up. They thought the markets would go down, and it just kept pushing and pushing up. Can we keep pushing? Well, absolutely. That still could happen, and that's why we play a numbers game. We got to protect the stop loss up there at 30. It is what it is. Keep it moving, and we're not gonna worry about it. Um, Also, once we're on a 15, but if we was on a daily, but if you look at all these moves up, this is a lot of aggressive move to the upside, which means that those 70% they're still getting annihilated. But let's see how many have changed. All right, so that means that that loss right here it says negative 11%. What that means is that 11% have changed in longs, meaning that they're lost at. So that's less people becoming long on it. It's decreasing, but the shorts are increasing a little bit. So the shorts are a little bit like 2%. So 2% now is gaining on that. So remember what I said before, when the net short or net long, whoever's the majority, they're typically all right. They're just too early. So we probably will go short, but a lot of times they have to be liquidated out before the market goes there, for the most part. All right, let me get out of this. No, there it is. All right, let me do that. Let's go look at another one. What in the world? All right, let's look at the British pound, Japanese yen. See what's happening over there. All right, so this look like an inverted head and shoulders, but let me look at it a little bit more to see. And I'm doing two things at once, so bear with me. I'm adjusting some trades I got active on my phone. All right, let's do this. Um, Inverse head and shoulder. Paste that on there. Top. All right. So there's nothing is showing up on a 15 minute for this. So if we're not doing the double bottom, double top, there's no trade opportunities. But if we want to do the bar elimination, a single engulfing bar here. All right. Remember this is the current one. All right, and this is the last candle. So what are we doing? First, you have to have a bias, though, right? You have to have a bias. And to me, this is the market structure is just too close. What that means is that if you look left, it's just real close. Like even if you engulf this, you don't have much room to run. You want clean. You want clean. All right, you want clean runs. So what is a clean run? Look at this big drop right here. This is clean traffic. It's not a lot of jumbo. You see how everything's jumbled up? This is a little bit clean. So if we was playing an elimination game here, we could talk. But here's the thing: you have to look left to see different target areas, um, so that you can have what we call exit points. And right here, even if it breaks here, what are we doing? But if something engulfed here, we could look left and say, well, that's some clean energy. Like, I mean, energy. There's some clean, candles. It's not a lot of choppiness. So you gotta remember, every candle represents buyers and sellers, or and it's big players, little players in the market. So that means they're what we call pit stops. They're landmarks. That's historical patterns, and there could be buy orders there, sell orders there. Um, the market has history. It remembers. Why is it a double top? Well, remember, look right here. If this first top happens, price drops, and it comes back to this area. You also have people who remembered that bought here. All right. Someone bought here, it got down, they're in drawdown, it comes back here, they at what? Break even. So all these traders said, damn this, I'm out. That's how a lot of your double tops happen. It's that people are coming back to break evens, and they want to get out because they've been holding on to something too long, or they was optimistic that, oh, this is just a regular pullback. I got it. So I'm gonna take you through the psychology. Just like this, watch. Oh, this thing keep going. Oh, it's gonna go higher. I'm gonna buy. So they buy right. They buy right here. Okay, they got it. Oh, I just a regular pullback. See, it just you know testing market structure. I'm good. Just a little drawdown. Boom. See, I'm smart. Yep, yep. I'm smart. We're going higher. We're going up here. Get here. Boom. It's coming back. Oh yeah, it's gonna come. It's gonna come back. But now they back and draw down again. The yo-yo effect. See, see, I was right. And then now they're in trouble. So then when it gets close to back here, let's say I'm out. I just maybe barely at what break even, maybe just a little loss. I'm out. But it's a lot of people who getting out. So what happens? It pushes the sell pressure down. It keeps going down, down, down because a lot of people got trapped that was going long. They just started closing out and hitting the sell button to try to get out. And remember, when price moves heavily into another direction, this is because of there's an imbalance. If there's too many people selling and there's not enough buyers to come in the market has to adjust its price to the downside. And that's just the whole entire market. It's nothing but supply and demand zones, right? So that's exactly what we're looking at. This right here, clean traffic. So that means is that if we start to break to the downside, which we did already, this is clean. You can look to your left as you drop and say, hey, these are some areas that we can visit. And for the most part, price did come down. You see how price eventually came down and sort of took out these levels. Well, this is what happens when it's clean. This is a perfect one right here. Look at this drop. It's just a massive, nice drop. But then all of a sudden, we get a bar elimination. We're going back up. You look left. That's clean traffic. This is what you want. I don't want to come in the market and deal with this. Like this, you see what I'm saying? It's just too. There's nothing right here. So to me, this is called no trade. This is no trade. As far as going long, if I'm looking to go short, and right now I don't really have a bit bias on this right now, but if I was gonna go short, I need this level to bit engulf. Simple as that. I ain't doing nothing until that. I don't even care if it busts up here. All right, we whatever. We just not trading that. So and then so we'll also be able to show you how to set your what we call limit orders. You got your limit orders. Well, you don't have to sit here and be watching. You know that this is a key level in the market. You put an order in and say, hey, if price drops below this, I want you to enter the trade for me, and I want my stop loss here, and I want to get out here. We can do that with our limit orders. I'm gonna go on a higher time frame, see what's going on. All right, so we do have a double top on a higher time frame. Somebody asked the other day too, how does it work if you got a double bottom and double top in the mix of each other? That's what it comes to. You gotta understand where the bias, what it looks like, what are we doing? To be honest, for what I see on this one, it would probably be the double bottom look like it really want to play out. Now, was one of the reasons. It, for one, it's this huge drop, and it's trying to it's trying to see if it can fight to get back up to clear this traffic. We also got a zone right here. You see this big, massive drop? That's a problem. That means that it was too many sell orders in. So what does this mean? That means that some big player in the market has some unfulfilled orders sitting up there in that zone right here. It looks like it wants to come back into this zone. So that will be my bias to say I think it's going to try to come back here. It doesn't mean it's going to happen. Now, temporarily for this double top, we still could get some embarrassments down here, but I feel that this is the key area that will come to. Definitely not this. But I think if we did drop, it'd come here, and this would make sense. But how can we play this if we want to? We come in, we set here. Now, because I see something already in golf, we will be, let me see, we'll be looking somewhat, try to, well, it's about an hour and 12 minutes left for this red candle. So this is all we really can go off of, but it has started to do what? Engulf this. So if I were to go short, stop loss above here, and we could play this level because this is the British pound Japanese yen. It's a lot of pips we fit here. So to right here, that's 80 something pips. I could play with that. If you're really, really conservative, you want to see that what? This level violated, and you want to see price close below. So if you new here, what does it mean by price close below? Let me give you an example. Let me take some of this stuff off. All right, we'll just do it from right here. Look at this candle right here. So imagine you got that, and then you got this. All right, candle drip down here, and it closed right here. It was coming down bearish, and then it had a little mini rally to create this wick, and it closed right here. If it closed right there, that means it did what? It closed below this support line. So if we play the same game, we're not going to look to enter this trade until we have a price close below this level to go ahead and finish out the completion of our targets. So you see the numerous ways to where you could play this. Like look right here, engulfing. All right, we want this candle engulf, this red. All right. You may say, I'm not looking to enter until the candle closes above. There you go. This candle closes above, and then this next candle, you just look to take trade. And this would have been, a nice rally. In hindsight, it looks simple. It can be a little daunting, thinking about that. But it just takes practice. Keep doing it over and over again. And I think if you guys, that's why you just got to keep practicing marking up charts. But just stick with the first thing first is identifying, you know, what you call it, the double tops, double bottoms, and just sticking with that. Look at CAD, JPY, 15 minute. All right, so this double top played out. So this was yesterday. So this was decent. So if somebody had that, it would have been successful. That's a good. That's 66 pips on that one. And it did hit the target. The target was 129. But if you do go to the target, that's good. And you got it. Sometimes I would trade it to the target if I see something that makes sense. Like right here, this is a head and shoulders pattern. It showed up. It played out great. It was perfect. This is clean traffic. See this? This is clean traffic. This is what you want. This is when you look left. You're like, all right, if I clear this area, I got this. If we were looking to go long here, this ain't it. You look left, there's too much choppiness, right? See, it's too much. Like if you think you were gonna go long here, even if it rallies something, like you running out of real estate at this point. But this one's fell off a cliff, and we want to see price get back to that area, right? And if you look, once you look at the videos that I got in there, talk about the master class market structure. When you go through there, you'll see that I'm breaking out the structure area where price can come at. Try to get back in uh, what they call order blocks. So this one played out. What do we have now? Not much. However, this is what we call an H pattern. It's really it's really more like a bearish flag. I do believe this was going to go down even further, and I can go ahead and get the targets for the downside based off of this. I just like to take this, take the impulse. All right, you see it's dropping, going down. All right. All right, so these targets are already hit. Like we're trying to get to this next one. All right, so if this did come down, this would be the next area target right here, based off fib extension. All right, now if I wanted to, I now can measure this, and let me take a lot of this stuff off so it won't look crazy. There's a lot going on. All right, and withdrawals, and let's do this. All right, now I can measure and see what's some possible zones. I like this here at the 61% retracement level. If we do break down, this is what a zone will have marked up. And we do this. If this thing breaks to the downside, this is where we're coming to. And I just jumped in early, just playing around with it or whatnot. But that's not the sake. So you also got to be mindful that price come right to this area right here and create a a double bottom and shoot up. But this is a classic pattern that's showing up. That some people call it an eight pattern, but it's really like a flat pattern. And typically that is a bearish move. But this is the area we look to get to, and then this is the area where market structure was. A lot of candles hung out here, so this could be an area of influence. So you see how fast I move with that, but you would be able to get there and be able to see that as well too. Let's look at some. Look at EuroCAD. Like this is not a popular one, but all right. So double top did form on that one. All right. So now, if you see something like this as flat, sometimes you may say, I don't trust this. I don't know what's shaping up. Sometimes you go to a higher time frame. Let's see if the flower. You see how it takes away a little bit of those candles. It's somewhat can help you. So now we can play what the game. All right. So our bias is what short. We don't measure this. We don't measure the candle that's in in play right now. Is we got an hour and 4 minutes left before this candle ends. If there is no engulfing to the downside, if it closed, then we do this. We move it here, and then we have another one here. So whatever this next candle is, we want to see it off this. Then look, guys, this is clean traffic. So a lot of times I just take it to the first level, right in here. I'm fine with it. But yeah, we could take it down to the neckline. But remember, my rule is I take it within a range within near the neckline. I don't go all the way. So it's within this box area. You see that? These wicks over here is box. So it's coming down, coming down. I may take it right here. I'm out. While everybody else may want to go here. That's fine. And they may hit and may do it. But once again, when you're trading, it's almost like cooking. You can follow directions all the way to the T. Well, you can start adding your elements. You can you say I don't like to put this type of salt. I like to use this. I put a little bit more pepper here and there. It's for your taste, right? So that's what I want you guys when y'all be trading. You'll start getting a feel for things. You get a range. If you want to go all the way to the T to the net line, and it may be beneficial for you. That's for you. So I don't want you to say, "Well, Eric, don't do it. I'm not going to do it." No, for one, just at least follow our entries or why we do it, but your exits could be up to you. So we got, like I said, we got an hour now. We got an hour and 2 minutes left for this. So this takes a lot of patience, guys. This is on the 4 hour. So I ain't doing nothing until it get engulfed. But because that's not the candle that was beyond, we on this one. This is the candle that we need to be engulfed. Engulfed where? To the downside. That is the bias. You're like, well, Eric, what if it engulf up here? That ain't our bias. We don't care. It can go to the moon. We not. That's not what we're looking for. So that'll help you with not second guessing yourself. You got to determine, where is my bias? Where's market look like it want to go? Where's the position for that? And then you keep things simple with the 30 stop loss. That just means, once again, you may say, I like a 50 pip. You may play with bigger capital, or you may use less leverage or less lot size, and may say, I can do a 50, because your 50, you may only do 50-cent lot sizes. So if you do a 50 pip stop loss, that's only $25, which is smart. But you may also say, yeah, I may be risking 50, but I'll go for 300 pips. Whoa, that's different. So you're looking for that quality over the long run. So look at this. If you go to the target, that's 270 something pips. So you may say, if you want to do $1, you say, hey, I'm risking $50 to make 271. That's almost a 1 to 5 and some change, 1 to 5.5. That's not bad. Which means over time you can lose four. You can lose 4 trades in a row, and on the fifth one you still are profitable. But for 1 to 5. So yeah, so right now, if we was here, we're not doing anything. So you see how to make this much easier. But if you go on the lower time frame, you see what we're dealing with? It's a lot of candles. And you probably feel like I'm whipsaw. I don't know what to do. Well, guess what? We got our zones. We just need price to what? Break the zone. And we ain't doing nothing until then. Now, some of you may look on this right now. I'm gonna go ahead and get in. I mean, you can. Once again, it's your dish you want to make. It's up to you. But if you want to get out of the headache of things, you're like, listen, if it violate this zone, then we'll talk. If it don't, keep it moving. Right? What's another one? We hadn't looked at US dollar, Japanese yen. And this is the last one. I'm just open. If anybody want to talk about something, I'm gonna keep y'all forever. 15 minute. Do I have the double tops on? Yeah, I do. So nothing showing up there. All right, nothing showing on 30 minute. And if you ever come across nothing showing up, it don't mean that it's not there. In fact, we do have another double top USC indicator in bottom. It's this one right here. It is a little bit more valuable. So this one right here. So this double top is different. It don't wait for it to come all the way up to this zone. It has a numerical value that it calculates for you. But this one would have showed up as a double top right here. All right. And so if this would have showed here, this is how we would have played this. And let's see if it's going to show on the replay. Let me see. It these it's hard. It don't show up on the replay online. Yeah. All right, there it is. It showed up. I hope it don't be that late. But anyway, if we was here, remember our bias. If the double top shows, what we're looking for now is what engulf. We want this green bar engulfed by red. We don't get it here, but this one we do. And of course, take it back down to market structure area if we was trading it. But based off this double top right here, this is the target based off its neckline. However, once again, we got this double bottom. We got the targets up here, hadn't been reached yet. We will have to determine, our bias or what direction. And with this one right here, this is one of the ones where I probably wouldn't even touch. Um, it's not shaping up a pattern that we're looking for. But if we was here, how we gonna play it? What are we doing? Nothing. If our biases were going long, then I want to see this engulf. Stop loss go below here. Keep it moving. What was Moderna? Is it Moderna? Anybody got any questions?
Can you look at Tesla EY?
Who?
Tesla.
Yeah.
Thank you.
When I deal with stocks, I normally go into the higher time frame first. So I do daily. All right. So let me see something. Let me take this out. All right, all right. I'm about to show y'all. I'm about to show y'all a little hack. All right. So Tesla had its earnings. All right. So look at this. All right. So they had their earnings today. All right. Um, they said they had a surprise or whatnot. All right. So somewhat positive. Okay. Now watch this. What do you notice right here? All right. They still had something somewhat positive. Okay. Again, but what do you notice from earnings? All right. You have a rally, but then you have a drop. So I'm telling you guys, when earnings are great, it's typically a liquidity grab. People get in, oh, such and such earnings. I'm gonna go buy. Well, if you buy it, that means somebody want to sell to you as well too. Look what happened. The sell pressure pushed it down. Right. Um, you got a little bit right here. Let's see what they did with earnings on this. All right, so this one did pretty decent, and then you had 3 days worth of drop, but it didn't go any further. So this one is pretty decent. However, still, why after earnings we consolidate and then we drop? Like, why aren't we really trending? This is a good one right here. Look at this. This one did very well. They blew it out of the water. How you blow it out of the water and you drop it? What in the world? Over here again. Did pretty good. we're dropping. What's going on? So look at right here. Good earnings. All right, we tap out, we drop. So what will I be looking for with this? Me personally, I'll be looking at puts eventually because of the dynamic of that trend. That's happening. Okay, that's just personally me. Of course, we have this trend line, whatever we can do. If some people trade trend lines, I'm not a big trend line trader, but some people are. And I don't like diagonal trends. I like horizontals if I'm going to do it. But I do know for sure we got 3 days worth here that's fighting. All right, and we know that this is a area where, for whatever reason, prices just staying within this zone. So this is consolidation. So why is it consolidating this area? And then if you look here to the left, we're at market structure. We're back at market. What happened? Price broke, came back, retest. We're retesting this. Does this mean that we possibly could be heading lower? Could we be doing this and then that? Or we could do this, that, this, then that, or we can start trending down. Now I'm not telling y'all it's going down no $20, but you get what I'm saying. So yeah, now let's throw on moving averages. All right, so we're below the 200. Typically, that's bearish. You want it to be in a true bullish scenario. You want to see price above all three moving averages. So let's see if we got that on the chart. Anytime you do right here, all right, you see this? You see how price gets back above? It's above the red, which is I believe my red is the. Let me make sure. Where's my red? I think my red is the 20. Let me go look, make sure. Yeah. So the red is the 20, and the 20 is the 50 period moving average, and the green is the 200. So what happens? Price gets above all three moving averages. We're bullish. Anytime that price is below all three, it's not really that great. Like right now, you see how prices, it's try to fight to get above here, but it's still below all these tools. So we're still more like we're bearish. We're fighting. All right. So we back above, but also will this 50 serve as a what? A resistance point, possibly. Nothing right now screams bullishness for Tesla, even though they had great earnings. So you got to be careful when it comes to that. But yeah, it's below all three moving averages, so that's that. We can see what it looked like on a. All right, so we out of the water on the Bollinger Bands too. So yeah, this is one of the ones you just want to. And sometimes if you don't know what to do, you just observe it because you're gonna have these opportunities again. So then you will know how to play it. But it's a probability game. If you whatever however you want to take this, but you do notice a lot of people coming to the market that's new and green, and they said, man, Tesla went off this week. Yeah, great earnings. So guess what? They just buying their little butts off, and the biggest players in the market are like, thank you for the liquidity. We needed this. That's the name of the game. Um, let's see. Was anybody had another one? Take all this stuff off. Walmart. Let's look at a crypto right quick. That's what BTC doing. BTC rallying. All right, so BTC pretty strong on the daily. Let's look at the liquidation. What do y'all see what we had on the last workshop? Look at all this to your right. 78, 98, 95%, 64, 86% short. And then look. they get ate up, right? So yeah, but we at a critical level, so we got to be mindful of this level. Bitcoin may do it, surprise people. It may literally just go ahead and start ripping. Uh, could this be considered the bottom? It may. Uh, I've seen plenty of reports of thinking that it could be have already been the bottom. That's that. Uh, but we know Bitcoin can surprise a lot of people. Where we are now with the Fibonacci, right here, and we're sitting a little bit below the 78. Worst case scenario, if we do come visit the 88%, we'll be in 11,000 range. If it happens, it happens. If it don't, it is what it is. But we'll see. We don't know what the economy is going to hold. What type of events could happen in the real estate market. We have some of the macro events that have not been factored in Bitcoin. So it hasn't really been fully matured enough inside of a what you call it this type of macro events. So when it got started in 2008, we was going through our big huge housing crisis, and it wasn't a mature asset. So now it is. So can it withstand some of this economic developments? We will see. So we don't know what the rest of 2023 is going to bring us or whatnot. We do know we got a halving coming next year, so we do feel that we could be in great position going in 2024. So I'm gonna go ahead and stop the recording so it won't be too long for people. Hope y'all enjoyed that. Let's see. Stop.